Okay, let's get started. I know there's a bunch of people watching online too, and I suspect some more people will roll in on this rainy New York morning. Welcome everyone. My name is Jason Bordoff. I'm a professor here at the School of International Public Affairs, and I direct the Center on Global Energy Policy. Delighted to have Carlos Fernandez Alvarez from the IEA join us this morning to talk about where the global coal market is headed. I think it's one of the topics of most interest and most uncertainty. It feels like every day you see another headline that either the world is rapidly moving away from coal and China's shutting everything off, to the emerging markets, in particular in Asia, are enjoying tremendous growth in coal, and coal is going to be with us for a long time. This is obviously connected to what we see happening in global gas markets, falling costs of renewables, and we have a new administration coming in the US in just a few days that has promised to bring the coal industry back, and maybe Carlos will tell us whether he thinks that will happen or is possible. So I'm going to turn it over to Carlos in just a minute to present the findings from the IEA's medium-term coal market report, and then we'll have a conversation about some of the issues he raises and take questions from all of you. Again, a reminder for those of you watching online, you can ask questions via Twitter, as with all our events, through the hashtag CGEP events and our Twitter handle at Columbia U Energy. Carlos joined the IEA in 2010, so he's worked on many IEA publications, including its flagship publication, the World Energy Outlook, and he is responsible for the medium-term coal market report publication. He has 25 years of experience in the energy sector, in private sector and many government positions as well. I won't read the whole bio here today, but many years of experience in the energy sector, and now with the IEA putting the medium-term coal market report together. So please join me in welcoming Carlos Fernandez Alvarez from the IEA. Thanks.
Thank you. First of all, I want to thank Jason and Columbia University to bring me here, to host me here, and all of you to attend this presentation. Hope you find interesting what I'm going to present. So going to the content of the report, main findings. So in order to set the scene, let's say that 2015 was, let's say, the year what was most obvious, the change of trend in coal demand in the world. Why it was most obvious? Because we had a few developments quite unusual in the market. First of all, for the first time this century, in 2015, the global coal demand decline. So it was the first year in the century where the world used less coal than the year before. Main drivers was China with a big decline, more than 2.5%, and US with the largest decline ever. Second big development, as I said, China, after many years of more than a decade of incredible growth, 10% or so, in 2014 saw a decline, small decline. In 2015, this accelerated. And in order to see 2 years in a row of Chinese coal demand decline, we have to go back to 81, so the years of the reform by Deng Xiaoping. So again, this is like a big development, showing that 2014 was not a very unusual thing, but China has entered in a new trajectory. But international coal trade, so the coal that goes from one country to another one, declined for the first time since '92. So after more than 20 years increasing every year, in 2015 decline. So these three facts, I mean, they are all connecting, and of course, main driver is China. But I mean, there are three big developments, as I said, showing that coal demand in the world has entered a new trajectory, and I will explain why. But not everything was wrong for the coal industry. So in 2015, even with very low prices and sluggish demand, in countries like India, Russia, Australia, they managed to increase production. The reasons are quite different. In Australia was more related to the resilience of Australian industry, They were able to reduce cost, and even in this low price environment, they could gain share in the international market. In Russia, it was more related with the ruble depreciation after the oil price fall. So Russian coal became very competitive in the market. In India, it's more related with the Indian government desire to reduce import dependency, and then investment made basically by Coal India. So we have different reasons, but even in this low prices, low weak demand environment, but there were production increases here and there. And of course, main news was the price increase in 2016, quite unexpected by market players, and also I will explain the reasons now. But before going to more recent or even forecast, I would like to make a kind of a general reflection on, we had 2015, so it's quite a round number. Let's make a general account of how global core markets move. So if we go back to 2000, we saw basically three numbers. So we have 1 quarter of coal demand or consumption in US, Canada, North America, 1 quarter in Europe, half in Asia. And 15 years after, we have that Europe and US together are basically 1 quarter, whereas Asia now is 3 quarters. So we see that coal is really moving to Asia, and this trend, we think that in the coming years is going to accelerate. So we will have we call in the report asymmetry, because coal is the most controversial fuel for good reasons. Cheap, good for our energy access, but air pollution, climate change things. And with this asymmetry, discussions, agreements, and so on related to coal, climate change, and so on, can be even more controversial in the future. So as I said, 2016 main development was related to the coal price. So for people like me, many years dealing with these things, I remember the debate back in 2015, the debate in the analyst report in the community was if coal prices would ever recover, because with the climate change policies, the Paris Agreement was just around the corner. Demand is not expected great, and coal is cheap, you don't need a big investment to produce new coal, all these things. So that was the debate back in 2015. In 2016, the year started with the debate where was the bottom of coal prices. So at that time, forward prices were below $40 per ton. And people were discussing 40, what was the price for coal? 40? No. Everyone was wrong. So what we saw in 2016 is incredible rally. This is for thermal coal. For coking coal, prices went up to $300 per ton. We didn't see demand increase to justify this, so we need to look for the reasons. We need to go to the supply side. The supply side, the main things happen in China, also in the demand side, by the way. And what we saw was some movement by the government in order to balance the market. So basically, safety checks for the mines were enforced. And there was a very simple change. So the working days went from 330 to 276, and this reduced production in China and changed the whole thing in the world. Looking at the future, the structural oversupply in China is still there. These high prices, I don't think that they are also good for China. So actually, these measures about the working days have been softened during 2016. So what the market expect is more prices going back to normal. But I call your attention that 1 year ago, we were discussing about the $40 per ton level. Now we are discussing about the $60 per ton level. So, but I mean, I was the moderator of the discussion panel in a coal conference with all the market analysts. And my question for all of them was, do you see coal price in June 2017, over or below $60 per ton? And everyone but one said below $60 per ton. So you see that the expectations are not really bright. So this chart, I have to say that if you follow IEA work, I recovered this from 2012, because I mean for us the question that prices were set at China was not a question, was something that we were convinced, and but during some years there were other better or worse opinions, but I think now most of the people agree with us and with everyone that prices are set in China. Why? Okay, so if we see the map in red, there are the exporting in the Chinese context, so the provinces sending coal outside, and the green are the provinces receiving coal, let's say. The darker is the more they send. So basically, with a little bit of simplification, coal is produced in this northwest China, this triangle, Shanxi, Inner Mongolia, sent by rail to the northern ports. So these are the white square in the northern ports, and then there is shipped to the south, the coastal provinces. And this coal shipped from the northern ports competes with coal coming from basically Indonesia, Australia. I mean, you have this kind of arbitrage in many places. You have this in US in the Gulf of Mexico, with the Colombian coal competing with domestic coal. You have in the north the ports in Poland. You have this in India, you know. But what makes China different? The size. I mean, if you put, I mean, the coal ship from the northern ports is around 600 million tons, and the imports are around 200 million tons. So it's 800 million tons there. That is basically the size of the global seaborne coal market. And also the size of a domestic market compared with this trade, because domestic market in China is about 4 billion tons. So any imbalance in the domestic market in China goes to the international markets amplified. So as I said, I mean for us this was pretty obvious from since some years ago. There were years of discussion about yes, not, but I think after last year development, this is now is quite clear for everyone. So going back to our main information, the information people are really waiting for is our forecast. So basically, what we see in general is you see the red dot line. I put this because what we see basically is a big growth until 2013, let's say 4%. In order for you to make an idea of what it means, I would say that in the first decade of this century, half of the additional energy, primary energy in the world was supplied by coal. So, you know, for all the noise we heard about the renewables, the gas, golden age of gas, the nuclear renaissance, and so on, half of the primary energy came from coal. But let's say that from 2013 on, what we see is a plateau in coal demand. And this plateau is, of course, the result of adding all the countries. So if we go to China, the most difficult for many reasons. First of all, the economic development is quite particular in China. And second, in order to forecast, for example, US coal demand, I mean, 90% of coal in US is for power generation, used to be 95%. So we have to understand the power mix, electricity mix in US, and we are there. In China, only 50%, a little bit more, but I mean, around 50% of coal is for power generation. So we have to put power generation, steel, cement, industrial, chemicals, residential, and every of these sector has a different trend, and it's pretty complicated. So this is why we have this trend that is the result of all these different trends in power, in steel, in cement, all put together. Basically, what we see is that 2013 is probably the highest coal consumption in China. And we define like a structural decline, but very slow and with ups and downs. I mean, for example, in order to give an example, hydro production in China is very important. It's second largest source of electricity, and I mean, as everywhere, depends on the rain. So in a dry year in China, we could see coal consumption levels higher than 13. So this is why we call a structural decline, but ups and downs. So for example, at the end of the period, we see a hydro investment declining in China. Basically, they have been adding 20 gigawatt every year. That is really huge. And now, because there's not so many places, I mean, this development will decline, and this makes that, for example, coal generation increase a little bit. If we go to India, there seems clear that coal demand will increase. The question is how much. They're increasing renewables, and we believe that the renewable development in India, especially solar PV, will be really huge. But also, in order to give you an order of magnitude, the target of the government is 100 gigawatt of PV by 2022. Okay, 100 gigawatt of PV, give or take 160, 170 terawatt hour. This is less than 10% of power generation in India that year. So they will if they grow as we expect, and it will happen, they will need to increase power generation, and this will be the main driver, also steel, cement production. Likewise, in Southeast Asia, I mean, this is the ASEAN region. So in the ASEAN region, we have 5 countries without coal, let's say, use, but we have 5 countries where coal is important in the energy mix, basically Indonesia, Vietnam, Malaysia, Philippines, and Thailand. So, likewise, we expect a strong growth, economic growth, and also power generation growth in those countries. They have coal power plants under construction, and this will imply an increase in coal demand. We have the US. I will show you a slide in the US, so I will not spend too much time here. I will only say that we expect a decline in US, but slower than the decline that we have seen in the last few years. Likewise, in Europe, we expect a decline. Coal power plants are retired. Governments are announcing the end of coal. We have a very dramatic case in the UK, where the decrease in the coal consumption has been amazing, and other countries are in the same trajectory. There is the case of Germany, where despite the public and also the government's desire to curtail coal use, but as the commitment of close down all the nuclear power plants, this makes the decline of coal a little bit tricky, let's say. And also there is a very special case, that is Poland, where more than 50% of the primary energy comes from coal. The coal is domestically produced. 80% of power generation is from coal. So this is a problem of energy, also about employment, jobs, social. So There are a few cases that are particular in Europe, but I mean, in general, in most of the countries in Europe are just living coal. So this is the final result of all these things, and I want to call your attention to 2 points. I don't want to overwhelm you. First of all is the size of China compared with the whole world. So, for example, when people say India will be the new China, no, there's no new China. I mean, China is China, full stop. And also, Southeast Asia, we can compare with India or China. Because again, the question is, will Southeast Asia bail out coal markets, whatever? I mean, Chinese role is unique, Indian role is unique, and then the others are very, very small compared with China and India. So just a few words about China, because I think it's worth it. This is the demand, as I said, is the result of many things. But the point I would like to tell you is that for a few years, coal demand and GDP growth has been correlated. I mean, coal is now is over 60% in the good old times. It was almost 70% of primary energy in China, which is really huge. And we see that this correlation has been broken, basically driven by three main reasons. First is the energy efficiency across the whole economy, let's say. So our colleagues, my colleagues in the IEA of the Energy Efficiency Division, they calculated that in 2015 the energy efficiency measures in the final use of energy is basically 330 million tons oil equivalent. So this is give or take 650 million tons of coal. So I mean, it's something, you know, here, there, you know, industry, household. Second thing that is breaking this is the diversification we call. So now, to give also a number for you to remember, 1/3 of wind mills, wind generators are in China. So, I mean, they are really investing. Half of the nuclear power plants and the construction as well are in China. As I said, 20 gigawatts per year has been added in China hydro. That is really huge. So, I mean, this is something serious, and again, this is really removing, because all this power generation otherwise will be from coal. So this is removing a lot of coal, as you see from the mix. But what we notice is that for many years, the growth in China has been driven by investment, infrastructure. 1/3 of coal in China is infrastructure related, through steel, cement, power to produce aluminum, steel, and so on. So we made an exercise from 2013. We made the line, you see this demand with rebalancing is just correlating, using the correlation between electricity, steel, and cement with GDP of the last decade, and we just prolong to 2021. And we compare this with our real forecast, that when we take into consideration all these things. And we see that this has been really what has, let's say, changed dramatically the trajectory of coal in China. As I said, from growth over the almost 2 digits for a decade, we have now an stagnation or a small decline. And actually, the only sector in which we see growth is in chemicals, because despite the oil prices, there are still plans for coal to liquids, coal to gas, and coal to olefins, and so on. A few words in US, because I think you know this. So these are actual facts. It's not a forecast. It's just what happened. We took 1 decade, because it's quite round, from 2006 to 2015, 10 years. This is the decline in coal generation in the US. So what's the reason for this? First of all, many times overlook power demand. If you go back to 2005, 6, 7, and you see any forecast in power demand, the expectations were very high. We have the same thing in Europe, in Japan. So power demand, I mean, efficiency, energy efficiency exists, and you see lights and things more efficient, appliances and so on. And this really is removing or is making power demand basically stagnate. And I mean, this is the increase because we have to balance this, but you see that the increase is very, very small. This is decrease because this is generation. Basically, it's nuclear. I mean, oil don't have a great relevance, and we have here in US nuclear retirements now and then. This is wind, basically driven by tax credit. This is solar. Another thing I would like you to see. I mean, if you read the papers, the press, for every page on wind, you read 50 on PV, and however you see the numbers don't match with the perception. So sometimes the perception says something and the numbers say the other. And of course, this is natural gas. So back to our first coal market report. This is the 6th, so our first coal market report was 2011. I remember discussing about coal, natural gas, power generation. So we thought if gas prices go below $4.5 million BTU, we will start seeing some coal to gas switching, because at that time it was $6 million BTU. I mean, now $6 million BTU is science fiction, and even 4.5 is 4.5. Why, you know? So things change a lot in this coal to gas competition, and this is the reason, as I said, why we see now this slowing down, because gas prices have really reached maybe not the bottom, but almost. So this big coal to gas switching cannot continue. I mean, so now we will expect some decline because some retirement here and so on, also driven by renewables increase, but this big switch that we saw because gas prices were declining, we think that will really slow down. Just another thing to consider. I mean, we saw these coal developments in China. I mean, if we think about access to energy, poverty eradication, probably what happened in China in the first decade has been incredible. People living poverty and so on, basically burning coal. But as I said, there are two phases on this, and also now we see smoke in the cities, and CO2 emissions, and so on. So these are the two phases of coal, very controversial. So what we saw in China is that developments were really huge, unique, and it's not going to happen anywhere else. And for example, another number for you to remember, because first time I make the numbers, I said no, I am wrong. I'm wrong in the units. This is impossible. They were during one decade they were adding 200 megawatts daily of coal power generation. This is just unbelievable. I say, my goodness. As I said the first time I made the calculation, say I am wrong. Had to do it 3 times. So say no, it's 200 megawatts per day. And now, I mean, they have a big industry, very competitive. They can build plants are domestically 1/3 of the capex that can cost in Japan, US, Europe, if some plant would be here. And also they are exporting the technology. In many countries would need electricity and coal power plants. So we see that many countries in Asia, Africa, Europe, and America, Chinese investor has going there. I have to say that these are plants announced or built, so doesn't mean that any country with a dot has a coal power plant made by Chinese. For example, in Brazil has been built and is working now, but in US has been only announced. But again, shows that this is really, there is an important activity of Chinese investment outside. Just a few words of about coal trade. I don't want Jason to send me a warning. For coal trade, we also see declining. I mean, this year has been a little bit special because of the Chinese policy change. But what we saw was a decline now driven basically by Europe that will as demand will will decline so dramatically, also imports, and we see increase in the final years by the end of the period, driven by countries that are now building coal power plants and will need imports. I mean, countries like Vietnam, countries like Morocco, countries like Turkey, Pakistan, so this. And then also as a, kind of a analyst exercise, I mean, I would like to show how different is, to, for example, forecast the Vietnam imports, where we only have to follow coal power construction. They run base load pretty much. So coal domestic production has basically, cannot increase dramatically. So this means increase of imports. I mean, Malaysia, Morocco, all can be done in the same way. Likewise, in Europe, in most of Western Europe, places like France or UK or Spain or Italy, you see coal power plants retiring, companies announce, governments announce. So again, the decline in the coal power generation demand and imports, because France, for example, stopped coal production in 2004, so demand and imports is the same number. So this is it. We have another group, Japan, Korea, Taiwan, where they are large importers and pretty much stable, because again, they have the coal fleet, the steel mills, and things are not going to change dramatically. There are issues here and there. In Japan, for example, is the nuclear restarting, that is always going to happen and never happen. And this, of course, it's basically more related to gas generation than to coal, but everything is there, because if you have a lot of nuclear, coal power plants can be dispatched out in some hours of the day when demand is not big. But is pretty much stable. But then we have two countries where imports are very, very, very hard to predict, to forecast, because we have a big domestic markets, big domestic production, and imports only play this balance role. So this happened in India, where, more or less in round numbers, for 1 billion tons of demand, imports are around 200 million. So you have this. The government wants to reduce import dependency. Coal India is investing, is increasing production. But in India still, we can bet that coking coal imports will increase, because coking coal the quality of the coking coal there is not great. So it's difficult that if they increase, as we expect, steel production, iron production, blast furnace production, they will need to increase coking coal imports. We have another share for power plants that were built in the coast, designed for imported coal. Indian coal is generally very high ash, so these boilers designed for this specific coal, low ash, probably they will need imports. So we have a part there. We have another imports made to blend with the domestic coal. So in India, we have a range, but we know more or less this is the bottom, this is the range. But then we have China, where really is very, very, very difficult, because as I said, you have a market 4 billion ton size, imports 200, 300 million tons. So 600 million tons shipped from northern ports. Any change can really make things flip over very, very quickly. So I think this will be the new normal. We are with this story since we started the series about when we go to China, about talking about uncertainty, because at the end of the day, when you have such a big player that really moves all the market, and you have such uncertainties, because any small change in regulation here, there, move all the inputs. So, for example, you see the trajectory until 2000. I mean, China has been an importer. Looking back, has been a net importer, exporter, and used to be one of the largest, by the way. So net exporter until 2008. In 2009, became net importer. In 2011, only 2 years after, became the largest importer in the world. 2013, I mean, if we go back to 2011, I remember IEA was heavily criticized because our projection for Chinese imports were about 400 million tons, something like this, whereas there were analysts talking on 1 billion tons of imports. I mean, very legitimate, and I mean, they have their reasons, and we were very heavily criticized. I mean, I remember the coal industry said, you are wrong, you know, Chinese import will be 1 billion. I mean, we were wrong because we had the 400 million tons, but we were not so wrong, you know. But I mean, said that the trajectory on China imports are quite unpredictable, let's be honest. Just 2 words on CCS, because again we have good news and bad news. The good news, we have 4 large-scale coal-related CCS projects. The 4 of them in North America, 3 of them in US, by the way. Meaning that CCS exists, it's a proven technology, it's not science fiction, okay? Now the bad news. These 4 large-scale projects, they capture 8 million tons CO2 per year. Coal burning produce 14,000. So 8 compared with 14,000. So it seems that CCS is not science fiction, but basically now we are capturing nothing. So the IEA is also very insistent on this for many years. We need CCS. We need CCS even if we can imagine, as we do, a power system near zero emissions without CCS, because I mean, with a little bit of imagination, storage, hydrogen, wind, solar, hydro, nuclear, you can imagine a power sector near zero without a CCS. Will be a little bit more expensive, but you can imagine. But the industrial sector, steel, cement, and so on, without CCS, low carbon is really, you need to stretch your imagination a lot. So the IEA message on CCS is not changing. We need CCS. So to finish, I started with what we had. I finished with the summary of what we expect for the future. As I said, we expect the global demand basically stagnating, very, very depending on what is going on in China. We have pretty clear the trends in almost all the countries in the world. The only question is China, but the problem is that China is half of the market, so this can change. In China, as I said, we see this structural decline, but this ups and downs driven by, I mean, we were discussing before the presentation. This forecast is, to be honest, is made with, for 2016, 3% of power demand increase in China. When I ran numbers, people thought I was crazy because in 2015 was 0.5, 3%, you are crazy. At the end of the day was 5%. So again, very, very, very hard. And this 2% of difference is a huge number because China, and this 2% difference has been generated by coal. So we are talking of, about 2% of 5,000. So it's 200, so this is 50 million tons of coal, give or take. So we are talking that you have a hot summer and you have something there, and you add 50 million tons of coal. You know, that is the demand of France, Spain, Italy combined. So this is the thing. Coal trade, as I say, will contract, but we have developments of in some places, Vietnam, Malaysia, Pakistan. I mean. And also, I call your attention to a place very interesting to follow. That is Egypt, where are plans to build huge coal capacity. If this happens or not is to be seen. But there are shortage of electricity. It's a big country, and they want to diversify from gas. So coal is a possibility. They don't have. I mean, there is one mine in Sinai Peninsula. So basically, if they build coal power plants, 100% of coal, I mean, 99 will be imported. So this can change a little bit the balance. But again, China will be the main player. Coal prices, as I said, has been the main development in 2016. Coking coal has been the best performing commodity in 2016. Despite all these debates about the end of coal, and always any coal presentation I make, the IEA make always a call on CCS. We are not progressing in CCS, and we need to do it. Thank you very much. So if you have any question and I have any answer, I will be happy.
That was great. It was a lot of information there, a lot of things to talk about. So we'll just have a conversation for a little bit and then open it up and take questions from the audience. Let me just make sure I understand. In your conclusion, you said Chinese coal in 2021 is higher than 2015. Earlier, I thought you had said China has peaked. So I know this is only 5 years, but look a little bit further out. Has Chinese coal consumption peaked in your view? Yeah.
I mean, it's not a matter of this report. This is the World Energy Outlook, but yes, I mean, in the long term, we also see coal demand declining. Yeah.
And the primary drivers of that Chinese coal demand are policies, concerns with air pollution, or just the economic rebalancing that we saw? What's the primary things that have led to that and could change it, and the uncertainty?
I mean, yeah. First of all, this. I mean, as I said, 1/3 of coal consumption is infrastructure related. I mean, this development cannot continue. I mean, in this, let's say, decade, golden decade for coal in China, these numbers, 15% for some years of steel demand, production and demand increase, the 2,000 megawatts daily of coal generation. I mean, this is not sustainable. So you have this on one side. So you have that the economy is going to a more normal trajectory where services make the bigger share of GDP and so on. And then you have the diversification that is important. I mean, as I said, half of the nuclear power plants under construction are in China. Hydro, I mean, the hydro development is incredible. Wind, solar, and also for the pollution. I mean, in China is so particular that I mean the consumption of coal in what they call Sanmei in English, I think is bulk coal or distributed coal. So in industry, small industry houses, the consumption in China is something like 700 million tons, so larger than the U.S. consumption. Whereas in U.S. this consumption is zero, or in Europe, and this is the main responsible for the coal-related air pollution.
And that's a sort of use of coal that I assume you can't address with pollution control technologies like scrubbers and things. I mean, people tend to look at the U.S. and think of coal as being the power sector. And then one question is always, if you're serious about taking care of choking air pollution, people tend to talk about, well, you have to get off of coal, but in the U.S. we kept using coal. We just put scrubbers on power plants. Talk about whether that is a viable path forward for China or maybe not, because they're using coal in so many other more distributed uses.
Yeah, so first priority, and clearly first priority has to be this bulk coal. So this, as you perfectly states, you cannot put scrubbers or whatever. So basically, solution you have electric boilers, but I mean electric boilers are not suitable in many occasions. I mean, if you have a high enthalpy steam, for example, you cannot this. You have a gas, that is the obvious solution. But again, if you put the numbers in perspective, 700 million tons of coal means, give or take, 350 BCM of gas. This is the size of the global LNG trade. So this is kind of challenge. So has to be everything, and also a CHP, distributed heat. But I mean, to make a CHP, you need to build the infrastructure and so on. So I mean, and this is what is happening and why this is very difficult to tackle, because I mean, it's not simple, and the gas, again, you need the gas available, but you need to build the infrastructure for the places to have gas. So yeah, I mean, I take for granted that they will clean, let's say, the coal power sector, but even though the main problem is not there, it's this in this distributed consumption that is really difficult, because it's made by small players. So basically.
And when you say difficult, that means you don't see currently actions being taken that significantly improve or change it. Your projection of plateauing coal consumption means air pollution problems continue for a while?
We forecast decline in this distributed, but the problem is we need to match this with the increase in the gas. There is the main gas increase, So we see a decline of this consumption, but not enough to end with this,
What do you see happening with that effort to bring gas in to replace coal? You think it's more likely to be gas than electric?
Yeah.
And is
I think will be gas, and in some places CHP, more than electric. Yeah.
So what do you? Whenever Fatih Birol or Adam Szyminski visits us and presents the outlook, the first thing to say is always whatever. The only thing we can know for sure is that these projections will be wrong. That's not a criticism. It's just impossible to know exactly what the world's going to look like. So I'm wondering if you could talk a little bit about the uncertainty and if you're wrong, what do you think the most likely reasons are that you're wrong, and which direction for coal demand do you think that's most likely to go in? You could take the projections from 5 or 10 years ago where coal would keep going up and up because that's the world we saw in front of us, and then now you have a plateau, so that's a big difference between where you thought and what you think today. How likely is it, do you think, actually we'll look back 5 years from now and you'll say, well, we thought it was going to plateau and actually we saw this sharp drop in coal? Or is it more likely to go in the other direction? And what are the key drivers that would take it in either of those?
So first of all, we try to be as transparent as we are. For example, in this, I don't know if you read the report, has been by chance, but in this report we have a study about the analysis of all this year and where we have been wrong and why. So, for example, I can say that in the past we were wrong basically in 3 things. First, the rebalancing of the Chinese economy was larger than expected. We account on this, but not in such a not in such a way. So we projected more coal in China than relative because this rebalancing was not considered. Gas prices in US. We consider gas prices in US higher than has been in reality. So again, we had a less coal to gas switch. So in US, we forecast a higher coal demand. And in Europe, we also, in Europe, we were quite right forecasting the trajectory, first increasing, then declining. But again, we saw power demand a little bit higher than has been reality. So we had a little bit higher, we were a little bit higher in coal and a little bit higher in gas. This is basically the 3 main things that happened in these years. In the 5 years, leaving aside China, because in China anything is possible, we can be wrong. In Europe, it's very difficult to be wrong because, there's no capacities. We have a very good case now in France with the cold wave, and RTE, the transmission operator, is prepared, even to cut electricity, to make, to reduce voltage, to reduce consumption, to call people, please don't use. But you cannot increase coal use because in France now there are 5 coal boilers, full stop. And they will be running, and even if you don't have electricity, you cannot increase coal use. So in Europe, it's very difficult that we are wrong, and declines. In Germany, as I said, nuclear power plants are really are to be closed. So I don't know, some extreme thing like I don't know the problem with the nuclear in France, but no. In US, I mean, again, if we consider that the power demand is not going to increase a lot unless there is like a huge, I don't know, infrastructure development or something, but in general it shouldn't be the case. If you consider that there will be wind and PV development here and there, the tax credits, states and so on, I mean, you don't have many opportunities, you know, for coal to increase. So again, could be worse than we forecast. Maybe, you know, maybe. But again, as I said, the main driver for the coal demand decline has been the cheap gas, and I mean, gas has been very cheap, so I don't think we can expect gas going there. So, and then in the countries where we see the increase, like India, Southeast Asia, I mean, I think it's very difficult for gas to compete with coal, you know, because of the affordability and so on. And I mean, they are, I mean, when you don't have access to electricity, you are growing, you know. Of course, they all want to reduce CO2 emissions, and every country has commitments and developments of energy, renewables and so on. But I mean, we see that electricity demand will grow, and you know, they need electricity. So I don't know. We will be wrong, but
Well, I want to come back to the CO2 commitments in a minute, but you mentioned India, which has plans to grow the economy, expand access to electricity, needs to do that, but also Delhi has the worst air pollution in the world. So can talk a little bit about India as compared to China in terms of the different uses of coal. If you're saying there's just not another way to meet that kind of rapid electricity demand other than with a lot of coal, even if you also have a lot of renewables in an economy like India, does that mean they're just not going to be able to make any progress on literally toxic air pollution that's killing lots of people? Or if they say that has to stop, does that necessarily have impacts on coal demand?
So we made the air pollution report, a special report, and you know the main reason for air pollution in India is biomass use. You know, so cooking with wood, anything. So and I was in India in November with the worst smoke I've ever seen. Nothing comparable, even Beijing. You know, and the main reason was the harvest, rice and wheat harvest. A second contributor to the smoke was fuel, transportation fuels. You know, and I was looking for the data, and power plants, for example, was less than 5% of the pollution. So again, as I said, in China, the big enemy is coal in the many industry without anything, and also this bulk coal. In India, it's more related with biomass and so on. So I don't think, you know, and India, the main driver for the demand is coal generation. Now, coal power plants in India are running at 60% load factor, and they are building more. So, you know, they don't, even if they don't build more coal power plants, they can increase coal demand without increasing more.
So just to be clear, you're saying that you can still make large progress on air pollution problems by substituting current cooking fuels for LPG or gas, by dealing with the agricultural waste issues, and still actually have room for more coal. Yeah. And what about in the U.S.? I mean, you said that was one of the areas of decline. We're not going to see a lot of electricity growth, so you have coal declining, I think, at a more rapid rate in the U.S. than even in the EU, or similar. But and we also have a new president who's promised to bring the coal industry back. So does that add an element of uncertainty? Do you think it's possible to see stronger coal growth in the U.S. if the administration has that position, and what steps could they take if they wanted to?
I mean, we have to be very, very clear, honest, and transparent. I mean, we live in Paris, but we read the newspapers, and we also read the U.S. newspapers. So we know what that there is a new president and so on, but we don't speculate. So, for example, if you read the report, you will see that we consider that MATS is in place and is not going to be replaced. MATS has the effect has been already done because coal power plant has been closed. We assume that a clean power plant go ahead, but if it doesn't go ahead, the effects. Actually, until 2020, I think is the same number with a clean power plant and without a power plant. In 2000 is the 2020 decade where you notice this. So our model is made with this assumption, and we don't speculate. So if the new administration makes any policy change or whatever, and we put this, or announcement that are likely, we incorporate to our models and we change our numbers. But now we don't speculate.
Do your numbers account for the clean power plan, or they do? And how big a difference does it make if the clean power plan goes away?
No. As I said, for these numbers, until 2020, there's no difference.
Okay, because it comes into effect.
Come to effect after 2020. So right. In our numbers, there is a small difference because in 21st, you see that the two trajectories splitting. But it's not a big deal for our numbers.
And even if U.S. coal demand didn't rise, do you see any potential if the government wanted to try to bring lots of coal jobs back? Do you see anything government can do to increase coal exports, or can U.S. just not compete in the global coal market? If you wanted to ramp up coal production, but we didn't have domestic demand for it, is there anything the government could do if they wanted to?
For the coal trade. You have to compete in the international markets, and there are a few very competitive producers like Australia, for example, or Colombia here in America. So, you see the market this year with higher prices. Coal from Wyoming was shipped to Korea. So in US there are capacity and there are ports to export. So. But it depends on the prices because in a low price environment, you need to compete with Colombians, Australians, South Africans, and Russians. They are really competitive. And as I mentioned, my first slide, Australia, even in 2015, with prices, international prices 50, 60, Australian producers increase exports. So you have to compete.
And how sensitive is U.S. coal demand to the natural gas price? If we, for whatever reason, infrastructure bottlenecks, increased exports, weather, if Henry Hub were $1 higher than we projected today or something, how sensitive is coal to that?
Very sensitive. Yeah. So if you have a gas price, let's say over 4.55, your coal is a winner. So, but the thing is, coal power plants that have been retired and are not going to back to life. So you need very high gas prices, first of all, and then the recovery of coal will be until one level, not to former levels. Because, all these 50 or plus gigawatt retire are done.
So let's come back to, you mentioned the Paris commitments, climate change. You showed this plateau in global coal demand, which is a dramatic change from what we've seen in recent years. Obviously, the atmosphere cares about cumulative emissions of CO2, not annual flow. So even the numbers you showed look very different from what IEA's 450 part per million scenario looks like, and how steeply coal demand would need to decline. Can you talk about what assumptions are based into what you have now, and what kind of action would need to be taken to really start to see a decline in coal demand? What would be the key drivers of that from a policy standpoint or an economic standpoint?
Well, this goes beyond the coal report. That is really my core business. It's more, but we are, for example, very focusing on energy efficiency. This is a real game changer. We produce, for example, a energy efficiency report, like this called as energy efficiency as another commodity. And we are really insisting on energy efficiency a lot because it's something that can really makes a difference, you know. Of course, you have renewables. If you, I mean, you follow IEA works, we also say that if we want a low carbon future, we shouldn't abandon nuclear power, you know. So because without nuclear power, it's much more difficult to reduce CO2 emissions. We also see a big opportunity in more efficient coal power plants, for example, because I mean, from 30% efficiency of coal power plants to 43%, this is 25% of CO2 emissions. So this is a big difference. And we insist in CCS, you know. So I mean, there are, you know, a whole. If you see the how CO2 is abated in 450 compared with the current trajectory, you see that we need everything. We need more renewables. We need CCS. We need more energy efficiency. We need more nuclear.
I mean, I guess let me try to ask the question this way: if we were to see. If you were to look, if coal demand were to decline more quickly, or even to start declining and decline quickly, if we were to take a big wedge out of the outlook for plateauing coal demand, what do you think the most plausible or likely ways would be to do that? I mean, there's a lot of justified excitement about what we see in renewables, how quickly costs are coming down, how quickly renewables are growing, but as you showed, they're growing off an incredibly small base. And even if you assume a growth rate that's 2 times higher or 3 times higher, it's still really hard, at least for a while, to make a big dent in coal. So if you wanted to make that kind of dent, what do you think the most likely way to do it, you know, is going to be in the next decade or two?
I mean, I don't know, because again, this will be a speculation. We have our models, and as I said, we need a combination of everything. Last year, we made the big headlines with our, I mean, with the things happened last year. So, for example, renewables meant more than 50% of the new capacity. So, I mean, there are big developments happening, but yeah, as you say, it's not enough. So, we need to accelerate clearly.
And can you talk about the competitiveness of coal with renewables? So we talk about emerging markets, energy access. You want to electrify large parts of Africa and other places that don't have enough access to electricity today. How does the cost of either central scale or distributed renewables look with using more traditional forms of energy?
Well, I mean, we have there the data, they are declining, and we have seen some real low records. So we have seen the PPAs signed below $30 megawatt hour, for example, for PV or for wind in Morocco, in Abu Dhabi. So I mean, we see in US also there are quite low prices. So I mean, here and there, competitiveness of renewables, I think, has been probably, if I have to say something, in the last years, has been really one of the main things, you know, that we have seen this decline, especially in the solar PV.
The announcements that China's made about shutting in some of the mining activity and reducing some coal output, you sort of see excited headlines about how this is another signal they're moving away from coal. Is that the right way to interpret it, or is the goal to actually get the price up, as you showed, because they want to stimulate coal production and make sure the sector is economic?
I will give you, because we are analysts, so I am an analyst and I like to give numbers. I will give you a number for you to consider. The target of the 13th five-year plan for 2020 is 88% of primary energy from coal in China.
Yeah, the five-year plan.
The 13th five-year plan by 2020, 58. 58,
oh, okay.
sorry.
50. And how does that compare to today?
Now it's 60 something, yeah, but 58 of primary energy from coal, 2020.
It's a big number.
My goodness, it's more than that all the energies combined.
So let's open it up to questions from the audience now, if anyone has one. If you could just kind of come to the microphone so folks could hear you on the web live stream, that would be appreciated. And if anyone else has a question, you can just sort of walk over now if you don't mind. And if you could just briefly introduce yourself.
Hi, Mark Mitchell. I'm an investment banker. Could you just speak to met coal in the United States, domestic and or the export market? But we have great met coal here in the East Coast, and I'd like to hear your thoughts. Thank you.
Thank you. Very interesting question. And for the met coal, and this year has been a great year, of course, with these high prices. And I think U.S. met coal is maybe a personal opinion, but I think it's very good for blending. So I think this is a market that U.S. met coal will have. As you know, if you work on this, more than 50% of met coal, coking coal, comes from Queensland. To compete with this is difficult. And there is the big question about Mozambique. There are many people, as you will know, that thinking that Mozambique ramp up will be the end of U.S. met coal exports. But I think this quality of U.S. coal from Appalachian, I think will keep this share for U.S. coal. So we see, I don't remember exact numbers, but we see also met coal trading increasing because basically India and others are increasing imports. And as I said, I believe that U.S. coal, even if Mozambique ramp up production at it seems now, no, because Mitsui signed an agreement with Vale to increase production, and Nacala corridor is already running and so on. But I think the U.S. will be still used for blending. So I think.
Just to note that met coal is this year the worst performing commodity in the world, down 40%. So a year ago at this time, natural gas in the U.S. was $1.80 per MMBTU, and coal locally was around $2.40 an MMBTU. Today, gas is $3.50, and coal is again at $2.40. Considering the price of gas is doubled, many analysts think that U.S. coal demand will increase by over 80 million tons this year, if not 100 million tons. So the first part is...
What percentage increase is that, roughly?
From 700 and change to 800 and change million tons in a year. What are your thoughts on that? And also, I noticed in your analysis on coal demand dropping over the last 2 years, you didn't mention that the price of LNG went from 15 an MMBTU to 5 an MMBTU, and oil went from $100 a barrel to $25 a barrel. How much do you think was just pure price versus sentiment of coal retirement and environmental changes? Thank you.
Well, I mean, yeah, as I said, the coal and gas, they are competing in the same. I mean, they are not in U.S. Everywhere. They are competing for the marginal electricity, and I mean, by definition, gas price is more volatile than coal. I mean, I think it comes from the physical properties of gas and coal. I mean, gas, you need a expensive infrastructure to transport and so on. So, I mean, if you see historical volatility, gas price is always everywhere more volatile than coal. So, the matter of fact that now, say, coal gas price double versus last year and so on, I mean, this is normal and it's not surprising. When we make our forecast, we take this in consideration, and in the same way that after the big decline in US in 2012, 2013, we saw a recovery of coal, but inside the structural decline, we think that this is going to happen this year as well. You know, after the 2015, as I said, was the largest decline ever. Last year, another big decline, 8%, something like this.
Coal demand
No, will increase to recover part of the decline in the last 2 years, but in the context of a structural decline. This is how we see. Because as I said, when you have these gas prices of 1.56, I mean this have to recover, and when coal recover part of the share lost, but in the context of declining, because with more renewables, the gap for coal and gas is declining. Same thing we are experimenting in Europe. And you have this power demand stagnating, renewables increasing, the gap for coal and gas decline, and the competition becomes fierce, and you have this, and this is how we see.
To clarify my second question, the cost for power from LNG delivered anywhere in the world for a combined cycle is actually equal to coal delivered for like a 10 heat rate coal plant for the first time really ever. The gas is only maybe cheaper. than coal delivered.
No LNG.
So just for those watching online, we're talking about sort of the competitiveness of LNG and coal in global markets given the collapse in LNG prices.
Yeah, but no, even with the collapse, I mean, for example, in Europe, you go back to Europe with the CO2 price. In Europe, in the UK, they have the $18 per ton of CO2 floor. So in the UK, gas is more competitive than coal at almost any price. Yeah. But if you go to continental Europe, where you have, let's say, 5 euros per CO2, in Germany, only August, gas has been more competitive than coal in the last year, even with the LNG prices slow.
Coal rebounding from $35 a ton to $80 a ton in Europe, the prices actually dropped.
I mean, I checked last week, and coal was more competitive than gas in Europe, even today as at 90. Yeah, no, I checked last week before coming to the trip. Yeah. So I mean, gas has to be very, very cheap to compete. I mean,
What are the just so we understand the sort of prices that you think in Europe and Asia kind of are the break evens? Because obviously we've seen gas prices rebound a little bit recently in Europe and Asia, and they were much lower, down to $4 or $5 not long ago.
I mean, it's without CO2 prices, it's very, very difficult for gas, because I mean, I don't know if we make numbers. For example, for $75 per ton of coal, so you need something like $5 million BTU, something like this, and
That's the current market price for LNG is about $5.50, so it's close.
Yeah, but I mean close. But even though coal is cheaper, and expectations, so do you think this is a price that is sustainable? $5, right? But said that, it's a good point that we also mentioned both in this and gas. We probably will see this competition between coal and gas. Will make that prices be under check. Because you have coal making that gas when it goes up. You have a oversupply, so you have lower prices, and same with coal. So yeah, probably we will see strong competition and low prices. For a while.
I don't want to turn this into the medium-term gas market report, but when we had Costanza here for that, but I just want to understand how you think about the connection between the two, because I thought what I heard you say is if one takes the view that toxic air pollution, I mean, levels that are just unsustainable for daily activity and eventually governments have to respond to, it just can't continue to go on like this. If you believe that is true, that has to change in parts of China and parts of India, that has to make you more bullish about the outlook for gas demand, because I heard you say that is by far the most likely way, and they're going to have to figure out how to invest in pipelines or floating import terminals or something else. Is that right?
Yeah. I mean, and we are very bullish on gas demand in China, for example. Yeah, because and as I said, you have such a scale of coal consumption that even if you replace just a share of this with gas, this is a big deal.
Right. So when we think about the glutted market and the oversupply, that this is an important factor to consider. Antoine Half, formerly with the IEA.
Yeah, old colleague. Carlos, good to see you. I have three small questions. One is on the supply, because I think your slides focus very much on the demand side. And I was curious, there's been big changes in supply for competitive fuels. You talked about renewables, but oil production, with the price decline, costs have come down very hard. There's been very significant changes. Are there similar changes on the coal industry side? Are producers able to drop their costs, or are there big trends shifting the supply side of the picture? Then we tend to speak about coal as a single commodity, fungible commodity, but as came up at various times in your presentation, there's quality issues, low ash, high ash coal in India, met coal, different kinds. Are there trends among users, growing preferences for certain kind of coals? How is, in terms of quality, supply matching demand, and what kind of impact does that have on trade? And the last question is, picking up on what Jason said, there's scrubbers that have been installed in Beijing and in New Delhi and other places, in many cases China and India, where pollution problems have been very severe, but oftentimes utilities don't turn them on because it costs money. Do you see trends in the scrubber industry to make it more affordable for users to run the scrubbers and be more effective?
Thank you very much. Yeah, it's a pleasure. Antoine and me, we worked together for 3 years, no? 3 years or plus. So about the supply side, yeah, you're right, but we have to. We had only half an hour to present. We have seen in the past incredible reduction cost in some places. I mentioned Australia, for example. We have been in the past, and we still are quite positive about Colombian coal. Colombia is a place with good quality and good mines, and we see that. I mean, if there is this year, Colombian coal has been arriving to Asia since after a few years, Korea, India, again proving that it can be very, very competitive. We see, I mean, we have this Mozambique thing that is, but there are some issues about the quality and so on. And the big question mark on the supply side is Indonesia. Indonesia has been the mirror of China for a few years in the supply side, and now the industry has problems, and also the demand, domestic demand is increasing. So this, I mean, in the association Indonesia-China with this cheap coal, low calorific, lignite and some bituminous has been important. So I think Indonesia exports, we will see this declining, and this is an opportunity for producers like Australia and Colombia. We are in the US, and we received some critics in the book because we see some increase in exports in US export by the end of the period. But as I said, we see some increase in the trade, and then here in US there is capacity, there are ports, and why not? Because what we also have noticed that even with the price increase, there's not the sentiment that this price is sustainable. So we don't see too many. I mean, we don't have the final numbers, but we don't see many investment coming online. So people don't believe that these prices are sustainable. So about the coal quality, yeah, you are very right. There are many coals are mines. So there are different qualities and different movements, and even for there in our book, we present different forecasts for coking coal and thermal, as you know, but even for coking, we put together PCI and coking that are different markets, but I mean, you have to go to some numbers. So basically, needless to say that coking coal is not very much impacted by climate policies and so on, because basically it's the steel market. So again, we are very dependent on Chinese developments. I mean, this year we saw the decline in coking coal production in China, and this has really triggered all the prices and so on. There is then the Mongolia, that is, I mean, is imported coal in China, but I mean, Mongolia is a captive market, but they can only sell to China, you know. So this balance of Chinese production and Mongolian imports will be important for the trade market. But as I said, we see this met coal increasing, you know. About qualities of the thermal coal, the main thing is about Indonesia, and there is also a big question mark in India, you know, because what we see is that lower quality coal is increasingly traded, even in Australia. We see more 5,500 coal from South Africa, Australia coming to the market. And I think will be the case for the future, you know. So, yeah, maybe, you know, the South African coal that used to be the 6,000, or the Australia, I mean, not mention the 6,700. I mean, this is not the case. And last one was, what was about the last one? Sorry?
The technology and the scrubbers.
Yeah. I mean, again, if we have two markets, China and the rest of the world. In China, the industry is very competitive, and actually, to add to equip the coal power plants with scrubbers doesn't add too much cost. I mean, it's a few dollars per megawatt hour, you know. In other countries, this is different, and of course, for this, the main thing to study is India. There are a lot of work there, and the government is very serious, and is where, I mean, because in China, I'm convinced that it's going to happen, you know, anyway, because, I mean, this is a big opportunity, you know, this is a great potential, and it has to be done. But India is you know, where you have an opportunity to do that, and you have this economic component. So I think it would be interesting if you know, there are some reinforce of policies and so on to help you know, to clean a little bit. And also very important that many times overlook, of course, technology of the coal power plants is very important, but coal quality is also important. Because if you burn coal with 50% ash, you know, you have quite important emissions. So this is something that is many times overlooked and also has an importance.
Great. All right. Well, thank you. We're just about out of time, but there's so much changing in the coal market, and it's hugely consequential for climate, for air pollution, and for energy access and economies in so many of these countries. So we'll be paying close attention to it, and hopefully you can come back and visit soon and tell us in which ways we were right and wrong, and what the key drivers were. Thank all of you for coming. I'll just note our upcoming events. We have a busy week next week as a new administration takes power in Washington on Monday. We'll have 3 senior former officials from the George W. Bush administration: Jim Connaughton, the former chair of the Council of Environmental Quality; Jeff Kupfer, the Deputy Energy Secretary; and Bob McNally, who was the energy advisor at the National Economic Council and the National Security Council, to talk about energy policy in a Trump administration. That'll be 5:30 in the evening. And then on Wednesday, an event to release a new book in the Center on Global Energy Policy book series through Columbia University Press by Bob McNally, Crude Volatility, Why, in his view, we're in for greater volatility moving forward, which is timely given what we're seeing in the oil markets today. So thanks again for all of you, and please join me in thanking Carlos for joining us at Columbia today.